Hello, family. My name is Sir Ernest Asante, and I love you. As I initially did in my first video, we want to begin to help students with their accounting questions and journey. And this is my second tutorial video. If you have not watched my first one, you can check it in my video. We did introduction to accounting, financial accounting one, and we spoke about the meaning of accounting and some terminologies like recording, summarizing financial statement. And I even told you that with the financial statement, you will come back to it. We also spoke about users of accounting information. If you've not watched it, go and watch it. And I'm soliciting for your help. Subscribe to my channel, share with your friends who are also accounting students. We'll be coming gradually, and then by the time you realize we are helping students who are also ready to start their CA journey. Let's first of all build the background from here, and then we'll move forward to our CA topics. Right. Today we are dealing with assets, liabilities, and capital. Assets, liabilities, and capital. Now, let's first of all start with assets. But I want to begin with a scenario to make the accounting very easy for you. Now, assuming that Sir Asante is a level 100 student, I've come to school and I was given about 30 copies of exercise book. Now I see that my classmates are in need of exercise books, so I decided that no, let me think of a business idea. Now, what this? Asset is anything that has economic value. Anything that has an economic value. Okay, so anything that can bring income to a business or an organization, we can term it as an asset. So saying as something, I see that my classmates want a size book. Then I said that let me sell what I have to them. Now, ideally, this is an asset. It's for me, right? But it's going to give me financial interest. I'm going to get economic value from selling to them. But I was the one that brought it myself. This is a book that I was given to learn. So that is where the capital comes in. Anything that you start a business with is called capital. It could be money, but it could also be an item, an equipment. Anything you start a business with is what we call capital. Liability is an obligation to pay. So, for example, the book that I want to sell to my classmates, I have only four. My classmates are about 20. So I said, since I have four, let me go to someone else, Akosia Menu, who has a book. And I said, Akosia Menu, give me about 16 of your books. Let me first sell it to people. Then when I get the money, I'll come and pay, obligation to pay. So the four book is my asset because I am having it and it's coming from capital I'm starting the business with. Now, what I've also gone for Akosia Menu is I can call it an asset because it's going to give me economic value, but I'll have an obligation to pay to Akosia Menu. So this is a scenario I'm giving. Now let's start. Assets. What is an asset? I've already said that asset is anything that generates income or economic value to an organization. This lets a layman's understanding. Anything that will bring income to the business. So if the computer we are having is going to generate income, we call it an asset. If the thing that we are using is going to generate income, the generator, the plant and machinery, the lightness, anything that we are using, it could be tangible or intangible. I'll come back to that. But anything I'm using that is going to bring income to me, I can call it an asset. Now, there are types of assets. There are a lot of them, but let's come to the main types of assets. Types. We have number one, current assets, and we have two, non-current assets. Non-current assets. Now, non-current assets has also been called fixed assets. Fixed asset. Now, what is a current asset? And what is non-current asset? Now, I'm going to give you two ways to define it. The first way, let's come here. The first way is the intention while purchasing it. And then the second thing will be how long we can generate income. How long we can generate the income. Now, anything is called non-current assets if the intention while purchasing it was not to sell. So if the intention of purchasing the generator was not to sell but to help in the daily activity of the business, we say it is a non-current asset. We didn't buy to sell. That motor vehicle, we didn't buy to sell. We bought it to use in the day-to-day activities. That generator, we are not buying it so that we will sell. We bought it to use. So anything that is bought to help and use in the firm to help generate income, but the thing itself was not bought to be resold. We don't say it's a current. We don't say it's a current asset. We say it is a non-current asset. Again, how long are we going to generate income from? Now, anything that we are going to generate income from, but it is not up to, it is more than, let's say, it is more than one fiscal year. When I say fiscal year, accounting year, from, let's say, January to December. So, non-current assets, we know that it is going to take more than one fiscal year to gain income from it. Then we say that it is called non-current assets. Non-current assets. Let me give you an example. Now, the firm goes to purchase a motor vehicle. Meanwhile, we are not dealing in the trade of motor vehicle. We know that we may generate income from it maybe in the next future, but it will not be enough from January to December. So the income that we are going to generate from it will be more than one accounting year. Then we say that it is a non-current asset. It is fixed. What people normally used to understand fixed, fixed assets. But current asset, number one, the intention while purchasing it is that we want to resell. For example, stock or inventory. Tomatoes. I am a trader. I sell tomatoes. When I go and purchase the tomatoes, it is my intention that as I'm going to purchase it, I'll come and sell. So that is current asset. Non-current asset is that, okay, I'm going to buy a machine that I will use to make the tomato myself, or machine that will preserve the tomato. That machine that it is not something that I'm going to resell. So intention while purchasing. That machine too, in case I'll get any income from it, it will not be between that counting period. So that is the difference between current assets and non-current assets. Let's look at some examples of them. Now, current assets. Current asset one, we have inventory. Inventory, people call it stock. Now, it's very liquid because you can't say liquid that anytime that the thing is going to turn into income, anytime the thing is going to turn into cash, it's very liquid because inventory is nneɛma na metɔn no makɔtɔ bi every warehouse ana makɔtɔ ebegu warehouse. Egu warehouse deɛ bade biara metɔn nti the rate at which menye sika free mu no it's very short. Within one financial year, I will get all inventory ya makɔtɔ nyina bɛsa ama menye sika free inventory. Then we have receivables too. Receivables. Now we used to call it debtors. But it's no more debtors. Why? Because at first, focus a debtor or The debtors are not our asset, but rather the money that they are going to give us. So that's why they now came back and said, no, let's do it receivable. It's the receivables rather that is our asset. But in within one financial year, it's going to turn into money. They are going to pay us back. So let's call that one receivables. So receivable is a current asset. Receivable is a current asset. Receivable is a current asset. We also have cash. The cash either through bank or at hand. Or at hand. So cash now. Yeah, one also. It's already cash. So we said that whether it's at bank, you know that you can turn it into it is liquid, you can turn it to sikasisi. So cash, either through bank or yes. Now let's look at non-current. No, non-current. We have one. We can have plant and machinery. We can have fixtures and fittings, motor vehicle. We can have land and building. These are non-current assets. They are fixed. They are non-current assets. Intention in purchasing a land. You know that you don't deal with land. So when you go and buy land, your intent is not to sell the land. You want to build on it and then to help generate income. How long are you going to land appreciate? So how long are you going to generate? It is not within the one financial year, the fiscal year. So that is about assets, their types, and then current and then non-current. Now we have other types of assets. The wasting asset, tangible, intangible. I'll be doing a video on that soon. I want you to consume it bit by bit. I told you that we are taking it from the background. We are taking the background bit by bit. So I want you to consume it bit by bit. We said that assets, liabilities, and capital. I already said that assets is anything that generates economic income or economic value. Liability is an obligation to pay. And I said that capital is anything you start a business with. It could be money, it could be equipment, it could be anything. Anything you start a business with is called capital. We said there are two types of assets, current assets and non-current assets. Right. And then we said, how do you define it? The intention while purchasing it, and how long you are going to recoup the money. You are going to generate the income from it. And I've given you some examples. Right. Now we have another type. We have intangible assets and tangible assets. Tangible assets are assets that you can touch and feel. Intangible assets are assets that you cannot touch. So this plant and machinery, you can touch them. But when you say goodwill, like a name, goodwill, copyright, patent, you can't touch them. So we call them intangible assets. They give money. When you have a good, for example, Kwame Despite, the name, that name alone is goodwill. It generates income. That's why people do advice for people. But it is not tangible. You can't touch the goodwill. So we'll come back to that in my next video. But before I close this section, remember, when an asset, there are some assets that you may think it is a non-current asset, but it is a current asset in other companies. For example, computer. We already assume that computer is a non-current asset. Computer. Everybody thinks computer is a non-current asset because it's fixed. Computer there. But what about a firm that sells computer? So if that firm that sells computer purchase computer, the intention is to sell the computer. So it will not change from non-current to what? Current. So it's always about the intention. So don't rush to think that something is a current asset or non-current asset. Always know the intention while purchasing it and how long you are going to generate the income from it. My name is Ernest Asante and I love you. Like my videos, subscribe, and help us to help you. Share with your friends, and I believe that this small tutorials is going to go a long way to help you. The Lord bless you.